empire builders. So today, we got Ray Dalio and we have Michael Saylor, and they're talking about Bitcoin. Michael Saylor is giving his response on what Ray Dalio said, and also, Ray Dalio was saying some interesting things about Bitcoin. You guys go ahead and leave your comments on what you think about it, and make sure to subscribe and hit that notification bell. We're going to be giving you guys great content.
In a sense, I mean, you recently were having a bit of a said to, that's going a bit too far probably, with Ray Dalio, of course, the Bridgewater Associates founder. He believes in a new paradigm and believes it's going to be characterized by, and I'm just quoting, by shocking tax hikes and prohibitions against capital movements in assets like Bitcoin and gold. And, you agree with him in the sense that bonds no longer work as a treasury asset, but you say that Bitcoin is the obvious conclusion to all this. Why?
Yeah, Ray says that cash is trash. He's famous for that statement. And he says that bonds have negative real yields and they don't work anymore, and you're crazy to own a US dollar denominated bond. And then in that paper, he says, we're thinking about Bitcoin, but, we might be concerned about tax or regulation. We're not sure. But we also think you ought to have a very diversified portfolio of non-dollar denominated, non-debt instruments in emerging Asian countries, including maybe some China debt. That's very complicated. Okay. And so when I look at it, my response is the simple, obvious solution is buy Bitcoin as property. Bitcoin is not going to be a currency. Sure, if people want to move billions of dollars of Bitcoin across borders without KYC and AML, that's going to run into red flags, and I don't think that's going to happen. But I think that in all of the world that respects property rights, if you can buy gold, if you can buy stocks, if you can buy real estate, if you can buy silver and commodities, you can buy Bitcoin. And I don't think the world's got any problem, at least not the Western world, has no problem with people buying Bitcoin to hold as property. And it is the solution to the problem. The problem is, if the fiat currency expands at 15% a year, then not only does the dollar lose 15% of its value every year in purchasing power, but also value stocks that are valued based upon dollar cash flows lose their value. And commercial real estate valued upon rents and dollar cash flows lose their value. And of course, bonds valued in dollar coupons lose their value. So the real problem is an entire diversified portfolio that has any exposure to a currency which is weakening is also going to weaken. And then the theoretical answer is buy a property, buy an asset which is not valued based upon cash flows. And that means precious metals or trophy real estate, some trophy thing that you value, just own it. Art, maybe, a Picasso, a Leonardo da Vinci, or Bitcoin. Bitcoin exists only to be a pure monetary store of value, and it is not based upon the cash flows of any product or any service. And it is the apex asset because no government can print any more of it, and no CEO can print any more of it.
So there's Michael Saylor on Ray Dalio, and it's fascinating watching two investing titans share the same view but with fairly different solutions to the problem. Now here's Ray Dalio with why the debt supercycle is in the process of ending, how hyperinflation is going to be a big problem, and finally what he thinks about Bitcoin as a solution. But before that, a quick thank you to today's video sponsor, TrustSwap. You may have seen TrustSwap before, as it's been rising up the cryptocurrency market cap list fast, now cementing itself solidly within the top 200 coins. Swap is a very hot coin at the moment, and for good reason. If you are into your smaller crypto projects, you need to take a look at TrustSwap. First, what is TrustSwap for those that don't know? TrustSwap is a full-service digital asset ecosystem. There's four main tenets of TrustSwap: staking, smart lock, smart swap, and launchpad. So first, let's talk about what I think is the most interesting and successful aspect of Swap, the launchpad. The TrustSwap launchpad is your ticket for early access to the best new crypto DeFi tokens in the space. So, the best way to explain what Launchpad is, it is essentially a venture capital pooling fund that gives you priority access to startup crypto projects. Through the Trust Swap Launchpad, by staking swap you get guaranteed access, and the more swap you stake, the larger allocation of the project you receive. Pretty cool, right? For those of you, like myself, that come from equity investing and equity markets, this is essentially getting ground floor access to companies or projects before they IPO, but in this case, the cryptocurrency version. Now, TrustSwap isn't the only launchpad on the market, but what sets them apart and why Swap is so hot right now, running up the coin market list, is because of the success that the projects they have done through their launchpad. Check this out. Mobile Pay has done an 18x since launch, Yield App a 15x, and Real Chain Games a 9x, and the list goes on. So clearly some huge success from the projects that they have taken on in the past on their launchpad, and this is the reason why Swap is so hot right now. The TrustSwap team vet projects before taking them on through the launchpad and only try to bring the best to the community, and clearly they have been very successful in the past. So, how the Launchpad works: if you stake 4,000 swap, you get a guaranteed Launchpad allocation of the project. If you stake 7,000 swap, you get a 2x bonus on Launchpad allocations. And for each Launchpad process, you have a 12-hour window to choose to participate if you want to. So, a very interesting project, definitely worth keeping an eye on if you are into your smaller cryptocurrencies and your moonshot crypto projects, as they have clearly been hugely successful in choosing some good ones in the past. We will definitely be speaking more on TrustSwap in the future, but for now, back to the video. Here's Ray Dalio on the debt super cycle, why he expects stock markets to provide lower returns, and finally his opinion on Bitcoin.
Interesting. You know, when one looks back on one's lifetime and experiences, I'm 71. I started in the markets when I was 12, so I had a lot of that. I was born in 1949. That was the beginning of the new paradigm. And so my frame of reference, and most everybody's frame of reference, is something like from there. Maybe people will look at since 1960, 70 or something. When I rolled the clock back to 1900, let's say you look at 1900, and let alone if you go back before that, and you see, okay, pick a country, try it. Pick a country and pick an asset class and find, or any asset class, and try to retain wealth, and see what happens. If you start in 1900, and I picked that because we're not just starting at the new beginning, the beginning of the new world order in 1945, but you see the cycles, which in many ways are more similar today than any time in our lifetimes. You find that basically almost all wealth was destroyed. You could take the most successful countries. They would be the United States and Great Britain. If you just look at that period, let's say from 1900 or really 1910 to 1945, through the inflation, depreciation, value of money, through taxation rates went from 0 to marginal tax rates on income being close to 90%, depending on which country, and estate taxes rising to in the vicinity of 80%. And then if you look at then foreign exchange controls and the depreciation of money, and then you had wars. Imagine that period. In that roughly 35-year period, you had 2 wars and you had a depression. And what we might remember of it was not nearly as bad as if you were in Germany, Japan, or in Russia, or in any of the other leading, Spain, any of the other leading countries. In those countries, where would you have maintained wealth if you were starting in 1900? And then if you go back to other cycles, you go back before that, you look at the 1800s and so on, you see that happen repeatedly. Now, what that did is it prompted me to say, what would I create as the alternative to cash? I call it alt cash. In other words, what is the storehold of wealth? In terms of, let's say, asset allocation, you can protect yourself very effectively. And if you don't follow that kind of diversification, the traditional 60-40 or most asset classes don't work. So I learned that. As we look ahead and we start to think about the depreciation of money or class warfare or international warfare, I don't know how far those things are going to go. Nobody does exactly. But you know what I've tried to convey before, and you know what's happening, and you should consider the issue of really what is a proper alt cash types of portfolio that would have stood the test of time through that. The other thing that I learned about it is on all these debt crises, like 100%, which also create the bear market and so on, it's just a matter of either restructuring the debt or printing the money to get around it. And then it's the issue of, what is that money worth? No, I don't think there will be as ebullient in the next year. So as we go into this new period, I think you're going to see a pickup in growth and inflation. And with that, you're going to also see a pickup in deficits. And that pickup in deficits means that the government's doing that, particularly the United States, will have to sell a lot more bonds to the rest of the world. So the supply of bonds will come to the rest of the world. I don't believe there's enough demand for those bonds when we look at the supply and demand picture. And so it's reasonably likely that by later in the year, you will have to see the Federal Reserve come in and buy more of those bonds to make up the gap. So it's going to be a very interesting and challenging year.
All right, I got to ask you about a question. You made headlines recently by weighing in on Bitcoin, which you called a hell of an invention. Would you give us some of your thoughts on how you see Bitcoin, where it's useful, and I know you've been getting a lot of feedback from huge fans of Bitcoin and people who are very anti-Bitcoin. So where are you now?
So the reason I wrote it on LinkedIn was so that people could see it in my own words, because what I find is that people who are pro Bitcoin grab the certain sentences, and that people who are anti Bitcoin grab the other sentences. And Ray Dalio is supporting Bitcoin, or it says it's a hell of an invention, and it is a hell of an invention. Wow. Think about how great it was. And then others who basically, there's, sort of the concluding part of it also that, it could go down. It could be outlawed. It can be, there are a number of things that are real concerns. And it also can be, go down 80% or something like that. Or could be even more. And it's an option on a number of uncertainty things. Those are what's brought out by those who don't like Bitcoin. So life is not so simple. And when you like it and that. So I tried to be clear in what it is. And I don't even consider myself a particular expert on Bitcoin. I mean, I have to understand it because of the business I'm in. But anyway, I would encourage people who are interested in that to take a look at my broader assessment. And I think it's like in 2 pages or 3 pages, so it's not long.
But your take is, in general, you wouldn't mind putting money into it as long as you are okay losing 80% of that. Is that right?
Yeah. Let me give you the big picture.
Yeah.
Okay. Bitcoin serves a purpose in a sense of there are not enough of those tangible assets. So now let's take a look at Bitcoin from that lens. Okay. Let's go through some of the big points related to Bitcoin. First of all, it's alchemy, right? Mm-hmm. It's alchemy, meaning it's great. What you do is you invent a money that, and you own it all. And then you make other people like it, and it becomes a reality. And you get very rich because you own it, and then you have it come out, and it builds a self-reinforcing cycle, and it can become money. If it's just a matter of faith in it, and then it operates that way. And then because money doesn't have a reality. Money is it's like the tulip mania or whatever. You can, it doesn't have to have intrinsic value. It can have that. So now you're dealing with that quality. It's an alternative gold, basically, or it's an alternative real value asset in a sense, except it's digital.